Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here, Curtis Gunn. Jumping into the charts on this Thursday, October 20th. So is the final day ahead of Options X. A lot of the intraday patterns that I've been noticing have been very choppy, lots of whipsaw action, and it is part and parcel. There's lots of divergences across different stocks and sectors that are not causing assets and stocks to act like they should, just due to the fact that Options X is tomorrow. Now, typically most of the moves happen ahead of Options X, so most of the stocks are in the range where they really should be. With that being said, we do have a couple companies reporting earnings, which I'll be keeping my eye on: Snapchat, After the Bell, and HCA Healthcare. But overall, things were very choppy. The markets were up initially on the back of a dollar being down, but they actually lost all of those gains and completely reversed on the back of a dollar. So right now, the S&P is down 0.65%. Considering once again yields broke out and surged to a new high, both the 10-year and the 2-year, and then you had the dollar also strong. These markets are showing great relative strength in my opinion, which is why I do think we're still potentially going to see some upside, considering how extended yields are on all metrics and the basic inside bar bearish near-term pattern on the dollar. So the S&P here, you can see on the daily chart that they're still holding a little bit of this reversal, this bullish engulfing candle over here, and you can argue that you are making somewhat bullish consolidation, being the fact that you are trading at the upper range of that engulfing candle. So that is a short-term positive for the markets. If we take a look at the DXY basically, let me just remove a few of these trend lines here, just so I was just doing some intraday action, but you can see the DXY once again is into resistance, but what an impeccable reversal it is. We said that you likely would see a bounce off of this 25-day moving average because that was the trend. You saw it over here, you saw it over here, you saw it over here, and you saw it over here again. But the fact that you're not closing above yesterday's wick high is a short-term positive for the markets. You are into a ton of resistance. This is still your wide range red bar that the US dollar has to beat in order to move past this level of consolidation. Even if you do get past that consolidation, then you still have this reversal candle. So lots of resistance for the dollar. In my opinion, I think the dollar is going to see some near-term downside, probably to this 110, 110.50 level, which should help propel the markets in the short term. That being said, the dollar is still in a raging bull market, but I do think it is necessary for the dollar to retrace back to this 50-day moving average, just as it has on many occasions before it starts its next surge up. If we take a look at the yields and why I think the dollar is going to pull back, if you simply look at the 10-year yield, the bond here, the 10-year yield is breaking out of this range. You can see that we drew these parallel channels in for us. We've had it on our charts for quite a while, and today we popped up and basically broke out of that channel. Now, we haven't confirmed outside of this channel, so it'll be interesting to see what transpires tomorrow. But the fact that yields are still surging and the dollar is not making a new high alongside yields should be pretty concerning for the dollar bulls. I mean, generally the dollar moves in tandem with yields, and being the fact that all ends of the yield curve were rallying tremendously higher today is pretty surprising that the dollar could not even make a new high or close above that reversal red bar candle. So let me just erase some of these trend lines here just so we have a clearer picture. But you can see the US 2-year yield touching 4.61%. That is an exceptional move on the 2-year yield, basically temporarily almost breaking out of this channel again. Tomorrow we'll have to wait and see what transpires to see if this breaks out of this channel. Let me just flip back to the US 10-year yield because we did fill a weekly gap fill. So I'm just going to take you to the weekly chart. And it's interesting to note that on the US 10-year yield, there's a weekly gap fill here at 4.2%, which we actually just filled today. So that is a massive technical level going all the way back to June of 2008. And just to put this into perspective, when you see a yield move parabolic like this, that's an exceptional move in yields. And again, you would naturally expect some sort of a pullback to happen. It doesn't have to be a very big one for these markets to start to rip much higher. So again, the fact that all yields, the short and the long end yields, were rallying today, despite the dollar can't even make a new high or can't even close back above this wide range red bar in this reversal candle, just shows you that I think the dollar is going to see some near-term weakness, which should help propel the markets. Let's just check back to the SPY here. Let's go to the intraday action on the SPY. So the SPY is very intriguing because this was our pre-market gap up, then you came back down, sold off, and the market started to rally and rip, and it looked like we were making some bullish consolidation, and then the markets just gave out on the back of the dollar reversing. If we flip to the DXY intraday, you can see it's the exact opposite move. This is when the rally was transpiring in the spiders, and this is when the rally failed and gave up all the gains and started finishing negative. So it's really interesting to still denote the correlations between the overall indices. And right now in the after hours, Snapchat is slightly up on earnings, but we'll just have to see what transpires. The USO chart, looking at USO, you've once again closed back within this downsloping trend line. That is extremely bearish sentiment for oil. The fact that you had a failed breakout here, confirmed back below, retested, tried recapturing this above this trend line and failed to do it. At the early point in today, you were up above this trend line, which was showing a little bit of bullish momentum, but the fact that you failed and could not hold those gains is definitely a short-term bearish signal for oil. Let's take a look at natural gas. Here's our oil and our natural gas chart. Let me just pull that over a bit. Natural gas did have a little bit of another down day once again, but you're noticing that the volume's picking up, which means that people I think, are starting to accumulate. You can see some intraday action here on natural gas, making potentially a series of higher lows. So that is short term a little bit of a positive, and that's what we want to see. You did get a little bit of an intraday 30-minute bottoming tail on volume here. So, and the fact that we still held that closing low. So that is, again, a short-term bullish positive on natural gas. Obviously, we are long natural gas at this point. If tomorrow we see another leg down in natural gas, probably to this 550 level, we will look to accumulate more via the oil ETF. Let's take a look at gold. Gold was pretty disappointing today. Obviously, gold was rallying tremendously strong early in the day, and then when that dollar started to surge, gold gave up all of its gains and finished negative, making a new closing low, new closing low and a new wick low. So that is a short term, not a positive sign for gold, but being the fact that the dollar should see some near-term weakness is going to cause a bounce in gold. If we take a look at silver, silver's still hugging this trend line area. That is really intriguing to me. Again, the big level that I want to see us get above is this trend line, this downsloping trend line. If we can recapture that tomorrow, which it is options X, and typically the precious metals do see massive sell side pressure during option expiration. It's just that's generally how the asset class goes. But nonetheless, it is making a series of higher highs, a series of higher lows. So that is a short-term positive for silver as well. If we take a look at BTC USD, Bitcoin was strong earlier in the day. And then let me just erase some of these lines here. I'm going to remove all of these so we can draw a new chart here. But Bitcoin, if we look at the daily chart, I want to draw this trend line down here. Bitcoin is still struggling to basically break above this downsloping trend line. Now you've hammered on it once here, twice, 3 times, 4 times, and it's almost like you're trying to break above that. And you can argue that Bitcoin is forming a little bit of a wedge pattern here. Typically wedge patterns of this nature at a massive support level, which is, if we look on the weekly basis, the support level of 2015. We're still technically just trading below that level, but nonetheless, we are extremely close to potentially having a little bit of a breakout. We are still long Bitcoin with a tight stop loss, so we'll just have to see if Bitcoin can hold on to that level. With that understanding in mind, again, Bitcoin may make a move tomorrow on expiration date, options expiration date. Perhaps it's just waiting for all of those maybe puts or longs to expire worthless before making a move. Just keep in mind, we have trillions of dollars expiring tomorrow, which could really be the next big move in the market. Once those contracts expire worthless, we could see a big move in the markets perhaps on Monday, but we'll just have to kind of wait and see what transpires. Let's just take a look at the QQQ. So the NASDAQ, again, did finish negative as well. It was up initially, but it's just down 0.55%. Let me just erase that trend line. You can see the NASDAQ is also holding this bullish engulfing candle, and the beautiful bullish factors that you're still holding the high range of this engulfing candle. And right now Snapchat is currently down on the session. Let's just pull up the Snap chart. So Snap is falling slightly in the after hours. Let me pull in the 8-hour chart. So that is not really a healthy sign for the markets tomorrow. You can see that Snapchat currently is down about 7%. It was down 11% on the wick, but generally the first move is the wrong move. So it'll be interesting to see if Snapchat can go positive on this move. So again, Snapchat is making a little bit of bearish consolidation, but I would never short this stock at this low. When you simply look at how demolished Snapchat has been, I would be more inclined to wait for a big pop on Snapchat to short it, or potentially go long if it drops much, much lower. Needless to say, that pretty much covers everything today. We did pick up a new position today, NetEase. Basically, I like NetEase because it did put in this massive, massive volume candle, which supersedes all of your volume going back all the way to August, which was this wide range red bar. So that is a short-term positive sign, being the fact that you are having a little bit of this doji signal, which is currently actually at support. You can see that NetEase has been trading in this beautiful, beautiful channel where you hit it once, hit it twice, hit it 3 times, hit it 4 times. Now you've tagged that level again. You actually filled a key technical gap. It's hard to see it here, but this is a beautiful, beautiful potential setup which could easily retrace back up to this gap fill over here. Again, this is a company that is reporting strong earnings. So being the fact that it is oversold, it's a quality name, it's at a key technical level of multiple factors. This is a beautiful, beautiful setup. And the fact that I'm seeing massive accumulation patterns, you can actually argue that this is an intraday inside bull flag. You've had your initial bullish reversal signal over here. You filled your gap over here. Now you've just started to retrace. The volume trends are in favor of the buy side. So again, this is a stock that could potentially have a bit of upside. We did also start shorting FNGR again. We netted a beautiful, beautiful, I think it was like 30% or 25% on this not too long ago when we were shorting it up here. Now it's retraced basically most of this down move. And the fact that you have this weekly reversal signal in place, to me, that defines a massive, massive top. And again, if it goes higher, could it go higher? It absolutely could, but it's 1% of our portfolio. We're slowly accumulating a short on this position. These low float names, when they start to see these massive moves, it just really signifies that I do think we're going to start to see more downside. You have a big, big technical gap on finger motion over here, which I do think should be filled in the near term, not too distant future. And this stock is interesting because despite I think we're going to get a strong bounce in the markets in the near term, this stock hasn't been acting with the markets. You see how the markets were down today, but this was up. When the markets are typically rallying, this stock falls. So it's kind of an inverse play to a bullish market. So it's kind of it moves on its own, but typically when the markets are down, the stock goes up. When the markets are up, the stock goes down. So I'm in the camp that we do see a little bit of a technical reversion bounce in the near term, which should help bring this stock a little bit lower. Back down to Snapchat. Snapchat is falling now in the after hours pretty hard. So you can see Snapchat is getting pretty demolished in the after hours. We're talking about a 2018, 19. It keeps falling over here. So this is not going to be a healthy sign for the markets tomorrow. But that's what we thought about Netflix. Despite Snapchat falling here, we could potentially still see a bit of a market rally because Snapchat's market cap, despite it is a leading tech play, it doesn't really hold as much weight as it used to, just due to the fact that it has been demolished over the last 10 months. And we'll just have to see where this price action finishes off. But again, lots of volatility, lots of options, X shenanigans. And again, there's going to be tons of opportunities as we trade ahead. But let's just continue to monitor those yields in the DXY because that's pretty much everything for the market. So with that understanding in mind, please give this video a big like down below and we'll see you on